everyone. This is Antonio Barona, CEO from Sustainable Innovations. We're back again to a new episode of our Quarantine Chronicles. So far, we have explored industries like pharma, banking, IT, waste management, food, energy, healthcare, even government's points of view. And we are still missing what's going to happen in the finance or what's happening in the finance and online retail sector. Today's guest, indeed, is coming from these industries. He started his career in New York working for the big four public accounting firms. He has taught finance and master's degrees in the US and currently manages his own investment firm in Seattle. And at the same time, is also the CFO of Top Line Furniture, an online wholesale furniture distribution company based in Chicago. Today, we have the pleasure to have him with us and to tell us about these industries, their impact due to COVID-19, and most especially their sustainability impacts nowadays as well. So, Ron, welcome. How are you? I hear you're in Taiwan these days. How is everything?
It's good to be with you, Antonio. It's really good to be with you in these very, very trying times for really everyone around the world. So it's good to see your face.
Thanks, man. So now I'm going to explain. We're going to try to keep the same format as previous episodes. But to sum up, we have three main objectives. The first one is to get to know our guest, his background, his work experience, and his role. Pretty much, how do you get there? How's your journey been? Second, we want to know a little bit more about the industry and how these sectors are reacting to current events. And at the end, the idea is to leave a message to our audience. So that's pretty much it, Ron. So I guess we can start, and please tell us something about yourself, your background. How do you get there? And what does it mean to be the CEO of your investment firm and at the same time CFO for an online retail furniture company?
Sure thing, Antonio. So it started off as in my childhood, actually. Growing up, people would ask, what do you want to be when you grow up? And my answer was, I wanted to be a writer. I wanted to tell stories, craft narratives. And when my father heard about this, he got pretty concerned. He said, I hear, Ronald, you want to be a writer. I also hear that writers don't make a lot of money. How are you going to be able to feed yourself and clothe your family? That was his viewpoint. And he said, what about being a doctor instead? And if you know anything about Chinese Canadian families in the 1980s, being a doctor was like the holy grail of career and professions. But I said, doctor, you kind of have to be pretty smart to be a doctor. My sister is smart. She skips 2 grades. Maybe she can be the doctor. And so my sister became the doctor of the family and fulfilled my father's dreams there. So my father said, okay, no doctor. I know. What about being a lawyer? That's number 2 in the ranking. And I said, gosh, lawyer, you also got to be pretty smart to be a lawyer. Now, my brother, he's pretty smart. He skips 1 grade in school. Why don't he become the lawyer? So my brother became a lawyer and fulfilled my father's dreams. And so at this point, my father was getting a little more desperate. All right, no doctor, no lawyer. I guess Ronald's not that smart in school, did not skip any grades. I know, accountant. And so I said, okay, accounting, I can add, I can subtract. There's actually not a lot of multiplication or division involved too. I can be an accountant. And so, fast forward 10, 15 years later, I was working in New York City, the Big Apple, prestigious public accounting firm, had my CPA. And it was just a somewhat miserable experience. Accounting was all about rules and numbers. There was no stories. no narratives, and definitely not a lot in the way of character. And so I did what um, a young, ambitious person would do in their mid-20s to find himself. And this was not to go surfing in Hawaii and wait tables, but rather to go back to business school. And so I went to do my MBA at the University of Chicago, which at the time had, all the Nobel Prize winning economists and finance professors on its faculty. And for the next 2 years, I just immersed myself in the world of finance, specifically stock market investing. And it was just an amazing 2 years of learning and exploring what investing was all about. And investing is really the intersection of stories and numbers, I'd say. To be a good investor, I think you got to be able to look at a company and be able to tell the story of where is this company going to be in 5 years' time, in 10 years' time? Where does this company fit in its industry? What is the competitive positions? Who are the characters involved in this story? What are the things that could go wrong in this story? But you also need to ground it in a discipline of numbers, the accounting side, to look at the numbers, to look at the probabilities, to say, here's a wonderful story, but do the numbers make sense? And so in those 2 years, I felt that for the first time in this regard, at least, I found myself at this intersection of stories and numbers. And it was exactly who I was, what I was meant to do. And from then on, I pursued a career in investment management.
That is a really nice story. I feel like I'm looking into finance with the new eyes now, Ron. And it makes total sense what you just said. So thank you for sharing that with us. Now, can you tell us a little bit more about your business? What is Lakeside Financial doing, and what is Top Line Furniture doing? What is your role there?
Yes, so I'm the principal of Lakeside Financial, which was an investment firm founded 5 years ago, after having worked at other investment companies prior to that. And Lakeside Financial is a stock or equity focused investment firm. So I focus all my time on stock market investing. And the key there, it's, regardless of which strategy you pick, whether it's a growth strategy, whether it's a value strategy, whether it's an income strategy, the key to investing is really to, rule number one, not lose money. Rule number two, don't forget rule number one. And I would add rule number three, which is to look for opportunities, assets, companies that I could invest in that would compound the client's wealth over a long period of time, and hopefully at a pretty high rate. And that's really the name of the game in investing. So I've been doing this for about 5 years. Professionally at my own firm. Prior to that, I've done it for 6 years at a different firm. And altogether, I've been doing investing for about 16 years, starting with my own personal account in the very beginning. So that's my path, and that's what we do at Lakeside Financial. One of my first investors when I started Lakeside Financial is the CEO and majority shareholder of Top Line Furniture. which is a U.S. Chicago-based furniture wholesaler with special competence in online distribution, even though we do a lot of brick and mortar type of distribution in the furniture space as well. And about a couple years ago, the top line was growing very quickly. There was some growing pains. And so he had asked me to review the financials and what was going on at Top Line. And he and I, we just had really good conversations over the years about businesses, about investing, about how to look at an industry and figure out what the different companies are doing in that industry. And in turn, how do we position Top Line to really set the company up for future growth and more prosperity. So that's how I came to be also the CFO of Top Line Furniture.
I have two questions related to what you do. As you know, most of the people that are attending to these quarantine chronicles are young professionals. People are in their 20s. Knowing what you know in the finance and investment sector, what kind of advice can you tell them for them to do? I mean, or prepare from now, from the 20s?
Financially speaking.
Yeah.
Well, I see finance or personal savings and investments as a resource for you. And the more of this resource you have, it gives you a couple things, right? One, it gives you a certain independence, a financial independence to be able to pick your career, pick your path, to spend your energy and time in doing what really matters to you. And maybe you don't get there in the first day or second day, but over time, as you're able to accumulate and compound your financial wealth, you'll be in a better and better position to call the opportunity of whether you want to spend a lot of your life working at this particular job. The second thing I think financial wealth and independence gives someone is the ability to use this to make an impact. It's really a resource in addition to your time to make an impact on what would really matter to you. So I think the key is if I was a young person starting out in life, I would save consistently and I would invest consistently, try to start that compounding machine. And just like exercise, just like your health, you may not notice a difference 1 week, 1 month, a year, but done consistently over a long period of time, it does add up and it does give you some of those benefits that I had mentioned.
Okay. And what about the sustainability part? From your profession, from your experience, what has sustainability? I mean, how connection with finance and sustainability, how's it been in your world?
Yeah, I mean, I'm not an expert in the sustainability field by any means, but I am an investment manager, and part of my job is to observe what's going on in the world and interpret that in order to make good investments for my clients. And I think there's actually a parallel that we can draw between the global response to COVID-19 and also the global response to things like climate change. And if you look at the COVID-19 situation, I would say the world was not prepared for it. I mean, there were voices talking about the potential of a global pandemic. Bill Gates' TED Talk from 5 years ago was one famous example of that. And for the most part, we didn't do anything until you could argue it became too late. And the cost of trying to scramble right now to shut down economies to try to tackle the virus is a lot more expensive than if we, the world, had prepared for this years in advance. And so I think climate change might be in that same bucket of category where this is something that really requires a global response. No one country can tackle climate change on its own, just like no one country can tackle COVID-19 on its own. And so if we could prepare for this before even bigger disasters strike us in the world, I think we'll be better off at far less cost and with far less human and financial costs and anxiety.
Okay. So I think you're touching a little bit our next topic of the conversation, and how is the current events impacting both of your industries? I mean, the ones that work in investment and also on online retail. What's happening there?
Yeah, for sure. There's been a huge rush to online and digital products and services. And so, at Topline, we sell to online retailers, we sell to brick and mortar retailers. And when the brick and mortar retailers are forced to shut down by the government, people still need furniture, people still need those goods. And so all those sales got routed, I believe, or a lot of those sales got routed to the online channels. And so the online companies are definitely experiencing a very large and short-term boom to their services. Now, longer term, I think there might be some permanent effect in terms of market share shifts has accelerated from brick and mortar to online, just because people are just a lot more comfortable buying all these products online now. So I think COVID-19 has accelerated some of those trends in society as far as going from physical to online space. And I think a lot of that is going to stay with us. And you see that reflected in stock prices as well.
Is this a good time to invest?
Depends on what you invest in. It's usually at any given point in time, there are probably good investments and there are probably bad investments. But I'll say this, and I'll keep my comments just on the economy. It feels like I'm watching a car crash in slow motion right now. If you imagine, COVID-19 as this immovable brick wall over here, and the economy just smashes right into this health crisis, and if governments didn't react in such a huge and fast way, the driver would already be dead, and we'll be looking at an extended Great Depression already at this point. But I think, fortunately, in the U.S. at least, the Federal Reserve and the U.S. Treasury has jumped in there to provide a lot of support for the economy and also the markets. There was a brief week in March where high quality investment grade companies, we're talking about like General Electrics, Boeing, could not refinance their debt, let alone high yield or junk bonds. Weaker companies had no access to debt or credit. And that's that spells bankruptcy basically if you can't make your cash flow work. And to its credit, the Federal Reserve had jumped in there very quickly to basically say, we're just going to buy everything. We're going to buy US Treasuries. We're going to buy mortgage-backed securities. So those support the government spending. Those support the real estate market. For the first time, they said we're going to buy corporate debt. So they're supporting US companies directly. They're going to buy the ETFs that buy the junk or high yield debt. So they're supporting like more marginal companies. And they're going to buy state and local bonds, which means they're going to support the city and state governments as well. And this is a huge dollop of cash that has come in, and only the government would have had those resources to spend, to calm the markets down, to keep money flowing in the economy, to keep these companies alive while we deal with this health crisis. And to give you a sense of the contrast, 10 years ago when we had the financial crisis, US Congress kind of hemmed and hawed before finally passing an $800 billion bill of fiscal stimulus to support the economy over a 3-year time period. And 800 billion at the time was a very, very big number. In March, when this was starting to happen, US Congress has since passed $3 trillion of stimulus spending to be spent within basically the next 3 to 6 months, not over 3 years. So it's really an Austin Powers moment, when he's like, I want $1 million, like 800 billion, and then everyone laughs. No, we're dumping 3 trillion plus, the Fed buying up everything pretty much in our marketplace. But I would say if they did not do it, today unemployment is at 20%, and perhaps a lot of that would be temporary. But if the government didn't move in such a way, I think a lot of that unemployment would be permanent and at a much, much higher number. So we're still potentially in the early innings of the COVID-19 health crisis, but at least for now, we've had a brush with death, but we have not died yet.
So you're being a little bit optimistic, right?
You don't know which straw breaks the camel's back. And the crisis has caused a lot of straws to hit the camel's back. And you hope that, the government's really in the best position, I think, to have that financial firepower, but can they catch every single potential turn in the road where things can go wrong? I would say that the range of outcomes is quite large at this point. The optimistic outcome is that as economies reopen throughout the world, that we would not get a second wave of infection, or that when cases start to rise in a certain location, that the health authorities can put a lid on it very quickly so we don't have to go through shelter in place again. And if that's the case, then I think, granted, there's already been some bankruptcies and companies that probably won't go back or won't come back. So for example, Pier 1 was, a customer of Topline's, and they've just announced that they're going to liquidate all their stores. So even as the economy reopens, Pier 1 is not going to come back. All those jobs that Pier 1 had, those are not going to come back. And so hopefully if the case numbers stay low and the economy reopens, a lot of these companies can therefore bridge the gap, come back, start selling goods and services, keep paying their employees. Employees can therefore pay their mortgage, buy their products. Therefore, the banks are being paid on their loans, and that the economy keeps going. So that's the more optimistic scenario of where things can go from here.
Okay. Well, thank you, Ron. That was really detailed. So I think everyone has understood a little bit much better what's going on, at least in this case in the US. Um, Now we're reaching the final part of our conversation, and the idea is to leave three key takeaways. As you know, most of our audience are young professionals that just graduated or they're in the first years of the professional life, and now they're facing this crisis. And for sure, there's a lot of uncertainty. What would your three key takeaways would be for them?
Yeah, so my guess is you're running a pretty good program there, Antonio, and the students or the folks you attract probably all have a certain passion for life, a certain drive to succeed in whatever pursuits they are going after. Uh, so, so I think my comments here would be, um, regardless of what your passion is or what your pursuits is, uh, there are three things that you don't want to neglect in life, and life has a way of trying to break you at your weak point. So these are the three things in my mind. First is your health. uh, uh, you can eat poorly, sleep poorly, not exercise, and once again, you don't feel it for a month. You may not even feel it for a year or two if you're young, but you wake up 40 years later, and all that chronic damage and accumulation that can really get you. The second thing you don't want to neglect is, as we talked about earlier, saving and investing. Just like with health, you want to start early. You want to put a little bit of money away every week, every month, and let that grow. You don't want to wake up one day, you're 60 years old, and you're like, okay, now's the time to save. It gets a lot more difficult at that point in time. And I'd say the third thing would be, your friends and family. Uh, you know, you can't have a relationship if you call your spouse once every 10 years, right? Like, it's something just like with health and with savings, you have to do a little bit every day, every week, every month. And 10, 20 years later, there's a great friendship there. There's a great marriage there. And I think in many ways, um, friends and family and health are probably the most essential ingredients of what makes a good, fulfilling, and successful life. So as you're passionately driving after these pursuits and what you want to achieve in your career, just don't forget your health, your finances, and the people who matter most to you in your life.
Really nice answer, Ron. Plus, you gave us one additional at the beginning, finding your passion, and making it connect to to what you're good at, like with the storyteller telling within the finance sector. So yeah, find your passion as well. I think you gave us four. So
Well,
Ron,
I would
yeah,
say, be true to yourself. Uh, you don't want to be living, you want to listen to your elders, but you don't want to, I think, necessarily live your father's dream or live someone else's dream. I think the earlier you can figure out what makes you tick as an individual, and be able to arrange your life in that you can be spending your energy and time doing things that turn you on. The earlier you get there, I think the better off you would be.
Yeah. Yeah. Well, Ron, thank you so much. Those are very wise words from your side to your answers and to all of us. So we know that you're a very, very busy guy. You're a very different time zone at this moment. Thank you so much for your time, for sharing your knowledge with us. It has been really interesting to get your insights on this industry. And well, I really hope to see you very soon as all this situation happens.
Good to see you here, Antonio.